Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 7th of May. Starting off with the FTSE 100, which has hit further record highs. It clearly doesn't matter about doesn't care about the fact that Coutts is taking £2 billion out of the UK stock market. We had our target for 8,500 by the end of next month, and we were cautious in terms of saying that end of next month rather than potentially the end of this month, above 82.30, which was the top of the broken December resistance line, looking for 8,500 by the end of next month or even sooner. On the downside, not really expecting now anything lower than the initial April resistance, just below 80.50. Obviously, in the recent days, we've managed to stay above 8,100 even, which is very strong signal. Moving on to the DAX, and here you can see that we've got the market here breaking the recent neckline resistance around 18,200, which is a great sign. We were looking for potentially 18,500 by the end of this month, which hopefully will be done, and then perhaps up to 19,000 plus by the end of next month. All of that while we remain above the floor of the rising October trend channel, 17,800. Nice double bounce in the RSI 50 region as well, which tends to be a leading indicator on the upside. Worst case at this point would be 17,600 if there was some kind of rug pull, maybe a geopolitical one on this market. Moving on to the Dow, and here was a rather perky end to last week and the beginning of this week. We've had a bear trap island reversal, so gapping down beginning of last month and then gapping up. In fact, gapping down twice and then gapping up to start this month above the 50-day line there, 38,700. Looking obviously for a retest of the best levels ever. March-April resistance just under 40,000. Best case scenario target would be the top of that rising trend channel from back in September, call it up to 41,000 by the end of next month, which obviously would be amazing. On the downside, nothing worse than basically April support. 37,500 at the moment. Moving on to Bitcoin, which has snapped back quite nicely, or had done. Here you can see that we had the bear trap rebound from below 60,000, something where we were expecting 57, 58,000 potentially was what we were looking for, just to take out the stops below 60,000. We got that. Key now is to break back above 65,000 and the 50-day line, as well as the March resistance line there, 65,600. And that would then hopefully take us back up to the highs, record highs, towards 73,000 by the end of this month. What we don't want to see really is an end of day close back below 60,000. RSI just nudging above the neutral 50 level, which is helpful. Moving on to gold, and here managed to bounce off the new floor of that rising trend channel from February. Still 2380 to 2280 to 2300 holding, which is good. And we've broken that little resistance line there from last month around 2320. Above that, looking for basically a retest of the best levels towards 2440 by the end of this month. Moving on to the stocks, and I complained that Anglo hadn't moved up enough last week or over the weekend, and here, after the third unfilled gap to the upside, we see that it's finally responding. Initial target here was around 23-24 pence. Above that, looking for up to 32 pence, ideally by the end of this month. Yes, expecting this to move quite well, given the way that not only did we move in that kind of fashion back in January, but also market very slow to respond to very good news there with AstraZeneca. On the downside, don't want to see an end of day close back below that mid-April resistance at 17. So above 17, looking for 32 on Angle. Asiamet done us proud as well, and here you can see that the second target well and truly hit there at 1.2 pence. Above that, looking for up to 1.75 pence, and if we're really lucky and behave really well, it could be done by the end of this month, which would be, again, quite a coup. Ideally, we stay on the right side of a penny, whatever happens, given that that was resistance on the way down. Looking for that 200-day line to start curling up, which would suggest we're going into a golden cross, which would be very helpful. The stock that could be the next Asiamet is coming up, and here it has to be admitted, not too much charting material to go by, but we have a sharply rising RSI line there, so that's been in place since March. So I'm expecting RSI 50 to break and the 50-day line to break with quite a bang around 1.8 pence. If we get that, the initial target 2 pence, hopefully over the next week, and then best case is up to 2.6 pence by the end of next month. Risk reward here quite good in the sense that early while we're above 1.6 pence, recent support would be looking for a turnaround at ARC Minerals. Next up is a stock which I looked at last week and seems to be brewing quite nicely. Unfilled gap to the upside for Anglo Asian. That's one of our favourite signals, and here the break of April resistance so early in May at 71 pence suggests that we can easily get up to 90 pence by the end of this month. Double RSI 50 rebound as well, and we've got the 50 and 200-day lines almost ready to cross. On to Cornerstone, which has been one of the best stocks of the last 6 months, probably the year actually. Here we've got a rising trend channel there from August last year, top of the channel there, heading towards 50 pence, which we're looking for by the end of this month, while we remain above the floor of the channel, and recent support around 35 pence. So hopefully Cornerstone will step up to the plate after a bit of consolidation over recent weeks. Futura Medical also in the frame in terms of being a potential riser. The reason for saying that is we've got a bear trap gap reversal. We had a gap, unfilled gap to the upside back in February, and that worked as a buy signal. We've had a bear trap gap reversal for the start of May, so gapping up back on Friday, and the view is that the longer we stay above the old April support there at 34 pence, the greater the chance of a move up to 52 pence. Perhaps as soon as the end of this month, given that we're breaking the 50-day line and the 200-day line, and we've had that gap as well. On to Helix Exploration, which where I was looking for 17 pence by the end of this month. We seem to have exceeded that and left us flailing in terms of trying to find the next level up. What that could be at the moment is suggested by the lines I'm about to draw now, so probably up towards the mid-20 area, maybe 25, 26 pence on that rising trend channel, which I've drawn from the middle of last month. Hopefully we could get up to the mid-20s now, or 26, 27 pence actually, by the end of this month. Upside valid while we hold above the latest, well, the second resistance line target we had there at 17. So above 17 on the end of day close basis. Looking for 26, 27 quite directly. Only back below the floor of that channel there around 14, really delaying the upside scenario. Stock which has also done well of late is Inspired Energy, and the reason for the enthusiasm here is that we had an unfilled gap to the upside last month, and we managed to go into what I call a V-shaped bull flag. The initial target here at 82 pence, above 82 pence, looking for 105 by the end of next month, the upper parallel of that rising trend channel from October. Another stock which is gathering momentum is IG Design, and here we had a massive gap to the upside. We hit our initial target here up to call it 170. Above that, the upper parallel of that rising trend channel from June is suggesting 223, which we could see by the end of next month, while we remain above recent £1.56 support. Very good to see the next stock on the way up, Jubilee Metals, and here you can see that we had a gap close buy signal last week, at the end of last week, through the 7 pence area. We've retested our initial, a second target there around 7.8 pence. Above that on an end of day close basis, looking for up to 9.4 pence by the end of this month. The key here, I think, staying above the 7.5 pence zone. Next up is Kefi, where I didn't really want to look at the shares today, but the chart said otherwise with the bear trap gap reversal, so going to a new low there below 0.53 and then gapping up today. Obviously the shares have just really been in a range between 0.5 and 0.7, so not much to say, but if we can have an end of day close through the 50-day line 0.59, then maybe we can start talking about the shares filling the gap up to 0.75. Obviously today's RNS was as positive as the company could be. Moving on to Poolbeg, which, as I said on the last time I looked at it, is starting to stretch higher. Initial target here up to 16 or 17 pence by the end of this month. Best case would be up to 20 pence by the end of next month, while we remain above the gap floor at 12 pence. So looking like the bulls doing the job there. On to Totally, which is also gapped up today. Here we've got what looks like sort of multiple support there towards the 4 pence level. We've now gapped up through a rising 50-day moving average, and initial target here, I suppose, really to fill that gap down from back in November towards 8 3/4 pence by the end of this month. Upside valid while we remain above the 50-day line. On to Zephyr, which I think I've looked at 3 days in a row now. It's getting a bit boring, but the share's one of the best movers of the year to date, and breaking above that 5 pence target line. That was the second target there, looking for the third target there, 6.6 pence, well before the end of this month. In fact, almost time to try and draw a fresh rising trend channel, but maybe I'll save that for next time. That's it for me today. More updates tomorrow.